Blockchain is being called one of the most transformative technologies since the rise of the internet, creating an entirely new asset class and reshaping how the financial system works. But what makes it so revolutionary? How does Bitcoin stack up against gold? And where could Ethereum and other platforms take us next? I'm Johanna Bota, and here to break it all down is Eric Rose, Head of Digital Asset Execution at StoneX. Welcome, Eric. I
Good
want to
morning.
start big picture. Why is blockchain technology so transformative, and how does it stack up against something like the rise of the internet?
That's a great way to start. I would say that blockchain technology in and of itself isn't really revolutionary. It's really a distributed ledger, right? If we can think of it as a giant Excel spreadsheet. But the power to use that in a more efficient way with the rise of computing power has allowed us to create a new form of this distributed ledger technology, which basically allows us to document and allow for transactions and a number of other things to be permanently put onto a ledger that will be immutable and trustless and a number of other characteristics. So the core technology itself is really being able to put all these pieces together in a way. But if you break it down to its core, it's really just a giant ledger.
Okay. And I'm going to talk about Bitcoin right now because in a previous interview, you compared Bitcoin to gold because of its fixed supply and also potential as an inflation hedge. So, how do you see that role evolving, especially as governments continue to expand monetary policy?
Sure. I think Bitcoin and gold are certainly among the most highly compared assets. And when we think about why do people invest in gold, you can create a direct corollary to perhaps Bitcoin. And probably the largest factor that would be involved in that is anti-inflationary. Gold has been seen as an anti-inflation hedge for centuries, and whether that's actually borne out is still yet to be seen. But the core tenet of that anti-inflationary hedge is this concept of scarcity, right? And gold is considered a scarce precious metal, limited supply, although people are still drilling for more gold. But when you come down to it, that core thesis is still this scarcity of the asset. And Bitcoin itself, by definition, is the scarcest asset because it has a fixed supply. More gold can be mined from the ground, and more gold can be melted. And I believe the all of the gold in the world probably fits in a giant swimming pool, from what I've read. But Bitcoin is limited to 21 million Bitcoin that will only ever be mined. And in fact, if you account for some lost Bitcoin and people who've lost Bitcoin over time on lost the keys to their Bitcoin, you really may only have anywhere between 16 and 18 million Bitcoin available ever. And that core fixed supply is really what gives Bitcoin its anti-inflationary characteristics. When we go into gold a little bit further, we think about the monetary aspect of it. Gold has historically been used in trade. It's considered liquid. Well, Bitcoin is also used in trade. It's actually much more efficient to transact in Bitcoin than is in gold because you're not carrying gold bars with you to the store to go pay for things. Even if you move down to silver, the same concept applies. Bitcoin can be used as money a little bit, I would say actually significantly more efficiently than gold itself. So when we really think about the original tenets of gold investing, Bitcoin definitely stacks up better in that category.
I want to touch on Ethereum, which has become the backbone for decentralized applications, almost like a new internet highway. What do you see as the most compelling use cases coming out of Ethereum and other blockchain platforms?
Sure. So I think it's important to take a step back to the original question, which is, the use of blockchain. And I think that when we think about the computing power used on these distributed ledger networks, blockchain becomes, the only way for blockchain to scale efficiently is for it to be able to be faster, right? And that's what technology continues to improve is the speed of this. So when we think about transactions in our daily life, and this is where Ethereum will come in, the Bitcoin network processes transactions at 7 transactions per second. The Ethereum network processes transactions at 14 transactions per second. Now we take some other layer ones like Solana, which a lot of people are looking at as the alternative to Ethereum. And Solana can process around 4,000 transactions per second, although it's gone as high as 60,000. So now we start to get into the processing speed of transactions. And for comparison, The Visa network processes somewhere around 1,700 transactions per second. So for blockchain to be truly used in the fashion that we want, which is really just trustless, efficient, immutable transactions, it has to scale to higher speeds. If we're thinking about financial services transactions, the speed has to be thousands and thousands per second. So as we think about what is the Ethereum blockchain doing, it is allowing for people to build applications on top of it. And that means that the network itself has to be efficient. And so people will look at networks like Solana for speed. However, there is a centralization aspect there, or a decentralization aspect there, that makes it competitive. So when we think about Ethereum and we think about Solana and we think about these what we call layer one blockchains, it's really, can we create a base layer that allows somebody to build something on top of it that can transact trustless and quickly? And that's really the core of it. And so once you can do that, you can now move into all of the use cases of what do we do with data, right?
Hmm.
So we
Health
are
records,
transacting,
let's say.
all transactions, but everything in life really is a transaction, right? So we taking away the financial aspect of it, we think about data for healthcare, for toll roads, for a great use case for blockchain technology, which everybody likes to talk about, is the um, title insurance. So very quickly, whenever, or at least in the U.S., when you buy a house, you're forced to buy title insurance, which is really you're forced to have a third party verify the ownership of that property is who it says it is, and make sure there are no liens, and make sure the property is not encumbered, and that the property characteristics are what they are. Meanwhile, when you refinance your house with a new mortgage, you still have to get title insurance, but you've already done that. So when we think about taking something like the dimensions of a house and the characteristics of a property and putting it onto the blockchain, now you have all this information stored, and it's not stored in a file cabinet with the county assessor. It can be stored on the blockchain, and then now you can even take that a step further and say, well, I'm selling my house to you, and I can transfer that information on the blockchain very quickly and immutably, and everything has been documented. So that's a very nuanced use case. But as we think about use cases for blockchain technology, it's not really in the cryptocurrency trading that we see on TV. And what we're seeing is it's really going back away from cryptocurrency to blockchain and the use of blockchain. And so Ethereum is kind of the grease that allows that blockchain ecosystem to evolve. Same thing with Solana and Avalanche and a number of other layer ones that all have different characteristics that make them better or worse versus each other. So again, as I said, Solana was built for speed, but it has come at the cost of decentralization. So there are definitely a number of things that you can think about in your daily life where data is transferred, and the ability to transfer that data and store that data and then retrieve that data in a fashion and trust that the data is there and that the counterparty that you've moved data with is really the core tenant there.
And it can be traceable, which is one of my favorite parts, I would say.
Well, it is on a public blockchain. I think some people, or many people who are not immersed in the ecosystem, there are private blockchains. So I can set up my own private blockchain, and I can let you into it, and I can control all aspects of it. But when we think about public ledgers and public blockchains like Bitcoin and Ethereum, every transaction ever done on the blockchain is viewable, and I think it's a double-edged sword. But at the same time, it certainly presents this immutable history of what transacted and which wallets moved from which wallet to which wallet. So certainly the public nature of being able to look at previous transactions, look at the history of wallets, creates a layer of transparency that doesn't really exist in the financial system currently.
Yeah. So most people won't even realize then that they're already using blockchain in their daily life already. So then tell me, what areas of our economy or everyday experience do you think will be most transformed or changed by blockchain in the next 5 to 10 years?
Yeah, I think that, we touched on it a little bit before, but when we think about, healthcare records should be on the blockchain. It's great. Why we go to our doctor and they're, searching for other records from a different doctor in a different healthcare
Yeah,
practice.
it's the
You
worst.
can move data. Yeah, you can move data seamlessly across that. Obviously, payments is probably the most widely known. You've heard a lot about stable coins recently. Um, Peer-to-peer transactions is nice. Obviously, you know it it's something that we strive to do, is to kind of eliminate the middleman. So if we think about what is the core use of payments and blockchain and payments technology, is it's kind of reducing the friction, reducing the paperwork, reducing the back office nature of moving these transactions, recording these transactions, storing these transactions. All of that can be done more efficiently on the blockchain. So that you do see that obviously the payment system can really be impacted by that, especially when you have certain countries and certain economies that have a lot of friction in their currency movement or volatility in their currency in itself. So being able to move large stores of value very cheaply across instantaneous networks is great. Another area is supply chain management. I think that when we look at to verify the provenance of goods and services that we're importing or exporting, understanding how do we document how the milk that you're drinking came from the producer, that came from a certain batch, that came from a certain cow. Like you can really get down into verification and trust of the supply chain, which does start to eliminate certain areas of let's call it, I would say fakes, like in terms of kind of knockoff goods and things like that. Are you buying the Birkin bag? Yes, you think you are, but the blockchain can tell you where that bag came from, and
Yeah.
when
Or
it was
just
created, yeah.
poor sustainability efforts, maybe. I mean, that's what I'm excited about, is just knowing as a consumer where everything that I'm buying comes from. And the idea of that is actually quite exciting.
Yeah, and I would add another area that I think a lot of people will start to see going forward, which is kind of the entertainment area. Especially, I go to a lot of concerts, and I buy tickets for concerts. There is a secondary market for tickets. Sometimes they're fake, sometimes they're real. But now you take that a step further, where you can create loyalty programs. If I bought tickets for Taylor Swift and I'm on her mailing list, not only am I on her mailing list, but the group that manages her can distribute goods and services to token holders, to people who've bought tickets, because now they're on that ledger per se. So you do have the ability to reduce fakes within that industry, but also use that even further to seamlessly market to people who've shown interest in going to the concert. And now you have a built-in network that you can now start to monetize. So I think that taking that even a step further, the artists themselves really can use blockchain very efficiently. They can distribute their content. In theory, they could distribute the record labels, disenfranchise the record labels, create their music, distribute it on the blockchain, create a finite number of songs. I created 1 million songs, but to have that specific version, you have to have the correct, player that has the correct authentication with that blockchain. You can create scarcity within your music. Not that most artists would want to, but in theory, it can be.
Yeah. Lots of positives then. Eric, thank you so much for your time.
Thank you. It's a pleasure.
And thank you for watching. For more financial content, don't forget to like and subscribe to our channel.